In this video, I'm going to explain South Carolina real estate taxes. I'm going to show you how you can save money on property taxes and South Carolina personal property taxes as well. So you've probably heard that the state of South Carolina is one of the lowest tax states in the nation. And besides great year-round weather, low cost of living, and people are moving here. And why? Because of low taxes on property as well. So there are four parts to this video. If you watch it to the end, you're going to get all of these savings. Okay, so number one, I'm going to talk about property taxes. And number two, if you're retired or you're calling the area your primary residence where you're living in it full time, I'm going to show you how you can reduce your property taxes even further. And number three, I'm going to give you additional South Carolina exemptions on how you can apply for these to get your real estate taxes lowered even further. And number four, more importantly, I'm going to, if you have rental properties or furniture taxes, I'm going to show you how to calculate them. And I'm also going to give you some super valuable information about this. So let's start talking about coastal Carolina, Horry County, okay? So I'm going to show you how it works. So I have my little cheat sheet here because there's a lot of information. If you just closed on a house or a property in the state, what do you need to do? What do you do next, okay? So first off, South Carolina pays taxes in arrears, which means you're paying, we pay taxes from last year. Now that sounds kind of crazy. The tax bills come out in October, okay? But it's really not due, and the calculation of what that time frame is from January 1st through December 31st, okay? So they're not really due until January 15th, those taxes. So if you closed on a property, between January 1st and the date of whenever that tax bill comes out, let's say October 1st, you're going to receive a credit from the seller. So for that proration of that, okay? And that share of the taxes is going to be on your closing statement if you haven't gotten one of those already. Now you're responsible for the taxes for the entire year from that point, but it's going to be prorated. They pay the back part, you pay the forward part. So if you have a lender that's required to escrow taxes, some lenders do this, your lender is going to take the taxes out as an escrow payment. So just make sure you look at that on your bill, if you have a mortgage. Now, the second part to this is if you closed after the tax bill was issued, so it's be after October, right? The collection is going to be collected on that portion of your statement. So when you get a closing, it'll be on that statement and it'll be prorated because it's after the fact. You're paying that portion of it. Now, here's the thing, the second part to this that I talked about is if you're retiring in the state of South Carolina is extremely tax-friendly. So Social Security income, for instance, is not taxed, which is great. That's another reason why a lot of people are retiring to our area. They're getting to a lower taxed area. So, and the second thing is, a part of that is that retirement or pension income on that sort of thing is super friendly as well. So it's a very low tax rate. It's one of the lowest in the nation. Okay, so if you are moving in as your primary residence, this is where you're retiring to, or you're moving from another state and you're moving into South Carolina, you'll be a resident, okay? So specifically here, I'm talking about Horry County, the county. So if you have a home, you claim it as your primary residence, okay? You'll be eligible for a special assessment. Now, assessment doesn't mean it goes up, it means it actually gets reduced, okay, in this case. So you'll be reducing it. You want to call the assessor's office, and I'm going to have a link below so you can call them, or visit one of their offices, and you want to fill out an application. This application you can get through the assessor's office, and you scroll down for the application, and it's going to reduce it, and it's called a homestead. Basically, you're here, you're in the state, and you reduce it from your normal tax rate down to a lower tax rate. Now, there's another part to this that's very important as well, and that is this homestead exemption. Okay, so if you are over the age of 65, okay, you get an additional, again, these are keep on reducing. I want to make sure you're checking every box and you're getting everything that you can possibly get. But if you're over the age of 65, or you're a disabled veteran, or you're totally disabled according to Social Security, and you have to live in the state one full year to get this next tax credit, you can apply, and again, to the auditor's office, and it'll get a tax reduction. Now, what I want to tell you about this is I've looked at taxes from all over the place. And I look at some houses, some people are paying $1,000, and I know people laugh from the Northeast that you're paying $1,000 in taxes for your house. It's true. But then I look at when they've got this special exemptions, the two that I've just mentioned, I've seen tax bills that are like $29. So it's very tax friendly here, guys. So here's the end part, and I just want to make sure that you understand this. There's a thing called personal property taxes or furniture taxes. So if you have a rental property, okay, and the seller has rented the property prior to this time, you got to pay those taxes. You got to pay these taxes when you've transferred, okay, when that property transfers over. So I want to let you know that the auditor's office, when you have property taxes, personal property, this is if you're in business and you're making money, guess what? The county, they want to make money as well. If you're making money, they want money. So if you're using this rental property to make money, there's a thing called a furniture tax. Now, I want you to realize that the furniture tax is based on the value of the contents in the property. So think about this. If you went to, how do you value that? If you went to a place and you sold it online, how much would you get for used furniture? Okay, so think about it in terms of that. Now, if you don't fill this out, guys, you're going to get assessed a value of what they think that is. Okay, so make sure that you fill that form out. That form is called a, hold on, please hold. Anyway, you go, it's a PR 26. So if you fill that out, you can go to the county assessor's office, go to the download forms, you look for that, you fill that out, and usually that tax bill will come out in October 1st as well. If you don't get the bill, don't think that it's not due. You want to go in there and make sure you check that. So make sure that the portions that you have paid, if you're transferring a property, have been paid by the seller, their portion from back, and then you're paying from that point forward. So I hope this was helpful. Again, if you do, we got hundreds of helpful videos here on this channel. I can't even talk. But if you go ahead and subscribe, you'll find other things on here that are super valuable as well. So wherever you are, whatever you're doing, I hope you're having a great day. It's Jerry with Jerry Pincus Real Estate Experts here in sunny Myrtle Beach, South Carolina. Take care, guys.